The broadcast is now starting.
All right, hello everyone. Welcome to this webinar, and my name is Seewing Yee from the Yee Real Estate Network. Thank you for attending, my members, investors, whoever you are out there. And today's presentation, the topic is creative financing strategies for real estate investors. And my guest speaker, he will come on momentarily. His name is Daniel Molina, and he represents Corevest, as you can see here. And again, he's going to talk about something that many, from time to time, more and more of our investors in our network has come into some challenges with respect to getting mortgage loans. So ordinarily, our investors get typical cookie cutter, Fannie Mae lending guideline for investors, 20 to 25% down, maximum 10 mortgages. If you go beyond 10 mortgages, then you have some challenges after that. And even before the 10 mortgage situation, some of our investors, especially the motivated one that want to maximize their mortgages, and maybe they can package several purchases in under one loan, so to speak, especially single family homes. So the Fannie Mae guidelines are restrictive in a matter in that they do not allow you to do that. So I don't want to give too much away. Not that I know too much about it anyway. Daniel will provide all the details about it. Uh, so without further ado, I'm going to introduce you to Daniel Molina. He will talk about creative financing for real estate investors. So take it away, Daniel.
Awesome. Well, Seewing, thank you for the kind words and introduction. Again, thank you everybody for attending our webinar and kind of going over some of our programs here. So like Seewing mentioned, my name is Daniel Molina. I am a relationship manager with Corevest. I've been doing this specialized financing now for the last, say, 4 years. Anyway, so before we get too detailed into our programs, just want to kind of give you guys a brief history of Corevest American Finance. As you guys are, I mean, that's how we started. We started off as investors, and ended up being very institutionalized and purchasing about 40,000 assets across the U.S. But ultimately we realized that it's a very fragmented market, and there's needs for very specialized lending. And when we started this, say, circa 2014, we really allowed us to flourish and become the leading private lender for residential real estate investors, right? And we do lend nationwide, so that's something that makes us very unique and sets us apart from a lot of our competition. So as you can see here, a lot of our investors, like Seewing mentioned, just have only a handful of options for getting funds for investing. So you got family, friends, your local banks, your conventional lenders, like you talked about, getting the Freddie, Fannie loans, marketplace lenders, and obviously your own personal cash. All these have drawbacks. All of them have some positives. Really, what we're going to talk about today is a specialized private lender like ourselves, because it allows us to really custom tailor the needs for the investor, whether you're a fix or flip, whether you're a buy and hold, or even if you're a blend of the two. So I'm actually going to start off talking about our bridge lending, or stuff that's interesting to our fix and flip borrowers. So as you can see here, most of the times when you guys are fix and flip borrowers, we're going to talk about assuming just a cash or family and friends incentives, right? So in the example, you're looking at a $100,000 house. You got to buy 100K. Say cash in, so you got to make the house look prettier, right? You want to make some money, so we're going to put in $25,000. You end up making about 25K. You're looking at a 25% cash on cash return in this example here, right? Versus with financing, we can leverage, I know it says 75%, we could actually leverage up to 80% of your purchase price, typically at a 10% interest and 2 points. So that's what that 10% INT is listed there, right? So as you can see, that because your cash is severely reduced with the amount of money going into each property, right, for the acquisition, you'll actually get a higher cash on cash return because you're making more money with much lower amount of capital going into it. So I typically see that a lot of our fix and flip investors, when they realize that they can do this with us as one property, one project, or under the facility of a line of credit, it really gives them the ability to increase their velocity and explode in their market, which is huge. And that's what we love to see as a private lender. So as you can see here, as we continue, right, again, if you have only 100K in cash, you're only able to purchase one property at a time and wait till that one actually, you purchase it, you close, so you're talking 30, 45 days later, plus the construction another 6 months later, and finally a sale, say another, 90-day period goes by. All in all, that's, I mean, you're losing about a year in between each project, versus on our credit facility, you're able to do this, 4 or 5 times with that same amount of cash, because $100,000 home with your planned equity and expenses, right, assuming that 100K purchase price, you're able to do 4 homes for the same amount of equity. So that's really what specializes us and sets us apart from our competitors, because we're able to just allow you to aggregate your ability and aggregate your cash, right? So all of a sudden, one home turns into 4 or 5 or however many you have the capability of doing. So again, this is just kind of some examples of a lot of the projects that we tend to fund. We do not shy away from markets. So if you guys are in an expensive neighborhood or even in a tertiary market, we'd still be willing to lend there. So this is a really good example of increasing your purchasing power. Normally, this would be somebody who couldn't, afford that type of asset in Southern California. We know that the home prices there are very high, but because they're able to leverage, up to 80% of their purchase price, we give them the ability to go ahead and target a market that they may not have always considered. The second thing that you want to see here is obviously going to talk about potential rentals, right? So as we talk about here and we start going into some possible buy and hold options, since you're able to aggregate these properties, if you're say like a buy, rehab and rent strategy, you're able to actually, in this example, increase the amount of rent you'll get, because again, you're doing multiple projects at once. And this becomes really interesting because this will tie into our long-term program. So you can take a short-term bridge loan and convert it into our long-term debt programs. So our long-term debt programs allow you to leverage your existing asset portfolio. So we do have some requirements on these loans. And for those of you looking at the screen, we're looking at that first option, that's just rental portfolio loans. So the requirements are going to be very simple. Minimum 5 cash flowing units. So this could be a 5-plex, 5 single family homes, or any combination. Minimum 5 units and minimum loan amount of $500,000. If we're able to meet those items, then we can go ahead and start leveraging the untapped equity in your portfolio, right? So if we're taking from the example previously, you've bought multiple properties and you want to now access the equity or cash out, you do this type of loan. Same thing, Seewing, if any of your people have, an existing portfolio and they want to access that, this is where they would come. And it allows them to leverage up to 75% LTV, right? And it's all going to be based off of your debt service coverage ratio. For those of you who don't know, you just look it up. It's a very simple calculation. It's really going to be your net operating income compared to your potential annual debt. Anyway, if we have a strong enough income being generated, I can leverage up to 75%. And unlike what you guys are accustomed to with conventional lenders, for me, it's really simple. If there's a property that's earning income, then I'll be able to do a loan in some fashion, right? So we may not be able to leverage that full 75%. Maybe we have to reduce the proceeds down to 65 or 70. However, we'll always be able to offer a loan as long as that property is cash flowing, right? Some of the other things I want to highlight for you guys are just our terms. So our terms are really mimicking commercial lending. So we're pretty unique because we take a commercial mortgage and use that to fund against residential assets, right? So we're a little bit of a blend, because terms like debt service coverage, or you'll see DSCR often, that's a very commercial concept. But then LTV is very residential, right? That's what a lot of us are used to hearing, loan to value. So we'll take a combination of that. We'll offer either a 5 or 10-year term that's fixed rate for that term based off of a 30-year amortization. And I think Seewing will be able to agree with me here. The very unique thing we do is, if you look at the line kind of third from the bottom, non-recourse and recourse options. So for those more sophisticated borrowers who have a lot of other assets or other equities set aside that they don't want to risk, a non-recourse option is a very, very desirable thing to have, especially when it comes to single-family homes. The other thing you can see here is that single asset rental loan. So this works very similar. Again, this is a long-term strategy. It is a single asset. As you can see there, single family condo, townhome, or 2 to 4 unit. We do have rates right now, depending on the market, are going to be around, say, 6.25, up to like 7.5 range, depending on leverage and asset. Again, we can leverage up to 75% LTV, and this is unique because it's a 30-year term, so it makes it very, very quick and very exciting for investors who know they want to go long term, but may not have the ability to take 5 assets down at once, or do not have 5 assets. And lastly, you can see the additional column here was that credit line, which we talked about earlier, which is really aggregating your ability to leverage your cash, right? So we're able to go ahead and give you the ability to increase your velocity, increase the amount of proceeds that you have, so that you can have more projects going on at once. So the other thing, Seewing, before I continue about our financing options here, how to prepare for it, do you have any questions on these programs yet?
Yes, I have a quick comment. Some of our investors have already have 10 mortgages, and they have no choice based on their knowledge or lack of. They have to resort to commercial purchases beyond the 10 mortgage limitation, according to Fannie Mae. But some of our investors have less than 10 mortgages. Maybe they have like 3 or 4 mortgages, and they don't want to, keep on buying one small property at a time, and then get dinged for the additional mortgage as they approaching the 10 maximum mortgages. So for example, one of my client, or several of them, they already have 5 mortgages, and instead of they want to buy a small little single family home, in Cleveland or Orlando, whatever, costing only, well, in Cleveland that is only 70,000. They don't want to, again, they don't want to count against one more mortgage in just a small purchase. So they rather, uh, all at one time, buy 3 or 4 homes for 80 grand each, or maybe 110,000 each in Cleveland, for example, and just cover it with one loan, with one portfolio loan. So that'll be ideal to look into. That's something that, Daniel, that is perfect for your portfolio loans. Am I correct?
Yeah, absolutely. I mean, I think the unique thing about what you mentioned, Seawing, and about our programs is really how they all are standalone exceptional programs, but really work cohesively. So, like that client can have a couple different options, right? Depending on how quickly they expect to purchase those additional assets, like you said, 3 or 4 several homes, but not put them on a conventional program and get dinged for the mortgage. They can utilize this line of credit to help aggregate that until they hit the requirements for the 5 rental properties on our portfolio loan. Now, in addition, like you said too, and it's one of the examples, they already have 3 or 4 mortgages, right? And they're looking to acquire an additional 1 or 2 properties. Well, if they have, say 4 cash flowing units, and they want to buy another unit, right? We can just go straight into a rental portfolio loan, which is very interesting because now we're doing a blend of allowing them to access to do a debt refinance and debt and equity refinance on the existing assets, right? The mortgages they already have, and fund the acquisition as well as the other property in Cleveland or wherever. So it's a really unique program where, we want to say, listen, we know you have assets out there. I want to give you the credit for it. Let's access that money so you can continue to grow. So, one of the fundamental beliefs about Corevest is really helping out our clients, right? We want to make sure that they have every tool necessary, to grow and to continue to be successful. I mean, this is, like I said earlier, one of the most fragmented markets out there. Almost everybody knows somebody, right? At least by 1 or 2 degrees of separation, who owns a rental property, right? And if you just think of it that way, you'll realize how small a lot of these networks are, and it's important to kind of get these lending avenues out there because it's going to allow just our market, our industry to continue to flourish, right? So I think that's really one of the things that's pretty important about the scenario you said, understanding that you don't have to use conventional loan. You don't have to get dinged for a Freddie or Fannie mortgage, right? And you don't have to, even if you're just buying one, if you already own a couple, we can do a blend of a refi and an acquisition, right? So we have plenty of options out there for you. So this next slide here, what you'll see is kind of the 4 steps on what we can do. So, we try to make it extremely easy. The first step is obviously gathering your property information. On any one of my deals, we will always have just what's called a data tape or rent roll, whatever you want to call it. It's really just getting property information, expenses and income, and anything else along that, like if it's an acquisition or a refi, any existing debt, or give you credit for any money that you put into the property. The second thing would be getting an application together, and then getting a quote, which I try to do within a 24-hour turn time, as long as there's not too much on my plate. Then we'll go ahead and complete the underwriting and diligence process, and we'll close your loan. Oftentimes you'll see on the slide previously, you'll see where it says 30 to 45-day close. On a 45-day close, I can tell you my record so far has been 27 days to close on 101 properties in Orlando. So we are really, really efficient. We want to work with our borrowers. So, if you guys are prepared, we can move as quickly as you're prepared to do. With that, I don't have any other topics to really discuss. So I did present my contact information there. If any of you want to feel free and reach out to me, just make sure, you give Seewing a shout out when you reach out. And I want to make sure, Seewing, if there's any other questions that you think you can have, let's go ahead and talk about them.
Yeah, well, Daniel, thank you for your time. Very, very high level, great information. Is another way to educate investors out there. So my objective is to, as I speak to my investors on a daily basis, and I know everybody's situation is different. Some people are beginners, buying their first potential out-of-state properties, and other investors they already have 3 or 4 properties, and they're very, very motivated. They're very ambitious. They want to take it to the next level. They want to instead of buying one property at a time out of state, one property may take 3 months to to open and close escrow and get the property rented. It's so time consuming, so much effort have to be expended. But by using your type of loan product, Daniel, an investor can cut tremendous time out of their daily lives by buying 2 or 3 properties at a time, single family homes, 2 or 3 single family homes at a time. Just package it up and we're just doing one loan through your source, Daniel. So there's such a time saver and stress saver, optimum use of a person's time and effort, and leveraging the property and being efficient. Everybody, I'm sure you agree, Daniel. Time is precious. Each day as an investor, you lose the one day, you cannot get it back. So time is about money. The value of money is about time. The more efficient you are with your strategies, with your loan portfolio, with your acquisition of properties, to reach your retirement goals, whatever they are. If you want to retire in 2 years, or whether you want to retire in 5 years, meaning you can have your real estate passive income to potentially replace the majority of your working income, that would be ideal. So, Daniel is just one great source to help you, ambitious and motivating investors out there that can quickly complete your multiple purchases and to achieve your financial freedom. By being part of my network, you investors out there, now you understand the value that my network will provide. The value is such that we have connection. We have it's a one-stop shop, and Daniel and his company as a lender, having this kind of great strategies is another way for you guys to to achieve your financial goals. Even nothing more needs to be said. So he's a very important resource, Daniel, and I'm glad I found his organization. I've been meaning to find a portfolio lender such as his. Now I'm able to do so. So as my investors in my network start to grow their portfolio, grow their experience and their confidence, I'll be able to provide better, guidance, better recommendation, and better connections out there. And so Daniel Molina and Corevest is on top of my team of advisors, if you will, to help you get to your financial goals. So that's my long-winded recap and summary. So Daniel, you have one quick, quicker than mine, 20 or 30 seconds recap. And
Sure. Absolutely. I mean, I think Seewing, you did an exceptional job of covering it all. But just to be quick, it's really important to see here you know, how you can leverage your network, right? I always tell people that your network is your net worth. There's nothing else more valuable to that. So Seewing is going to be a vital part of that. And the same thing too, because you're part of his network. Anything that you guys might have, feel free to send to him, so you can send it to me. I can review it. Happy to look at any potential items. Our goal here is, like I said, to help you guys grow and buy that house on the beach and retire. Right? We all want to be drinking drinks on the beach with little umbrellas in them. So let me help you achieve that. Let's see if we can help you achieve that. And if there's anything at all that we can do, don't hesitate to ask. And same thing. If you guys are known that you're buying stuff soon, I have clients who are selling their portfolios all day long. So this is a very two-way street for Seewing and you all. Just make sure you tell him to give me a shout. Let me know what we have, okay? But with that, yeah, Seewing, thank you so much. Gentlemen and ladies, thank you so much for having me. It was an honor. And like I said, if there's anything I can do, don't hesitate to reach out.
thank you so much, Daniel. Thank you so much. Have a nice day, everyone. Talk to you soon. Goodbye.
Goodbye.